I'm Priscilla Barrera with the Investing News Network, and here with me today is Chris Berry, founder of House Mountain Partners. Chris, thank you so much for joining us again.
Thank you for having me.
All right, so we're here again at the Cathodes Conference. How are you finding the event so far? Any main takeaways?
Yeah, look, it's a great event. I came to the inaugural one last year as well, and so this year is sort of bigger and better. And I think Benchmark has done a really good job of bringing a lot of the main stakeholders together, whether or not it's junior mining companies all the way, up to the major lithium mining companies as well, but also other stakeholders, cathode manufacturers, anode manufacturers. And there's, what I have found over the last few years is there's just a real lack of market knowledge around how the cathode business is run, for example, or the anode business is run. And I think that this seminar in particular has done a really good job of making that clear for a lot of people.
All right, and let's start by talking about the lithium market. What do you think was the biggest challenge this year for the sector?
Well, I think obviously, if we were having this conversation on January 1st, the entire sector would have been much more bullish than it is right now, or much more optimistic. And of course, you had a few events earlier in the year, the Morgan Stanley report, everyone still obsesses over that. But that, unfortunately, in my opinion, despite the flaws in the logic in the report, really set the tone for lithium investing in 2018. And quite frankly, it scared a lot of speculative capital away. And so, unfortunately, that set the tone, number one. Number two, the other thing that, of course, happened is this I would say, unnecessary and excessive focus on the China price, which, again, I'm sure you've had other people on the interviews that have talked about it, so I won't belabor it, but it's really inconsequential when you think about the overall size of the market and how, most of the business that's done in the lithium space is done on contract basis. My sense is that the focus on the China price is really overdone.
All right, and as you sort of touch on this, but one of the first statements that was actually made at this conference was about that sort of disconnect between investor sentiment and the demand forecast. What is your take on that, and do you expect optimism to return to the sector?
Sure. So I've been involved in various aspects of capital markets for 20 years, and I've never seen a bigger disconnect than I have currently seen right now in the lithium market, just with respect to the demand side of this equation. I mean, I haven't seen any data or any evidence that the demand narrative is slowing down or reversing. If anything, when you look at joint ventures, when you look at strategic investments, and seems like every week there's a new one, they're only accelerating. And the demand narrative, if you want to call it that, is only getting stronger. And so, look, my sense is that from an investor perspective, maybe 2016 and 2017 were really good years. Obviously, the lithium price went from roughly $6,000 a ton to $16,000 or $20,000 a ton, again, depending upon which price you look at. But now that prices have moderated somewhat, that's taken a little bit of enthusiasm out of the space. And so my sense right now is that 2018, when we look back on it, it'll be a year where valuations reset, because there are some enormously cheap opportunities in the space right now based on all of the blood that's been in the streets.
All right. And this also has been the year of IPOs. I think the last time we spoke, FMC had announced the spin-off of what we now know as Livent. Ganfeng was also set to list on Hong Kong. Now that both companies have made their initial debut on their exchanges, were you expecting them to perform as they did in the first few days of trading? Any other thoughts on lithium IPOs that you can share with your audience?
Sure. Well, I think, again, if you go back to the beginning of the year, I mean, the rumor mill was spinning pretty quickly about how much the companies were going to raise, and the excess, maybe not excessive, but the aggressive valuations. And of course, again, based on what I had mentioned earlier about some of the challenges in lithium in 2018, that lowered valuation, lowered sort of target price ranges for both the Ganfeng and the Livent IPO. I was surprised at how, I guess, poorly received the Ganfeng IPO was. But again, that doesn't really change anything in terms of how really powerful the company is in terms of its strategic vision and direction. And so, again, it's just another example of a mispriced asset. On the Livent side, I think, again, both of these IPOs took place amidst some increased volatility in the U.S. equity markets, which I think probably had something to do with how they were received. But, the Livent IPO looks like it's hanging in there. So I think, now the onus is on these two companies to deploy the capital and really grow the business.
Right. And we also keep on hearing from major producers about how difficult it is to bring supply into the market. Why do you think there is so much confusion among market watchers about this process?
Because up until about 2 or 3 years ago, quite honestly, nobody cared about lithium. It was a byproduct of, agricultural chemical production. And, case in point is SQM. I mean, they were a potash player with a nice lithium byproduct credit. And as the lithium price took off, they've shifted gears. Albemarle has done the same thing. And it makes total sense, by the way. I'm not saying they shouldn't be doing that. But, I think that, again, up until a couple of years ago, nobody really needed the in-depth knowledge of the lithium market that they do today from an investment perspective. As well as I do, every brine is different. And so that requires different processing, different economics, and different technology. And there just isn't a lot of processing technology on the brine side out there. And so that comes at a real premium. But again, it makes evaluating both existing and near-term or longer-term projects very, very difficult.
All right. And let's talk about prices, something you touched on earlier. And this understanding of how maybe falling Chinese prices could impact the rest of the world prices. What do you think investors should really be paying attention to? What is maybe the big mistake that you see new investors make when looking at pricing? And I guess, is it even worth looking at short-term prices?
Yeah, that's a great question. I think the biggest mistake is that investors look at price at all. And I say that somewhat tongue-in-cheek, but I think the way to look at lithium is to look at a price, and regardless of whether or not it's from benchmark or any one of the other services out there, look at it as an indicative level and look at it over the course of a number of months or a number of quarters just to get a sense for where you think things are going. Absolutely everybody in the space that I know, and my own personal opinion is that the longer-term LCE, or lithium carbonate equivalent price, is around $12,000 a ton. And so, I don't want to say advice because I'm not here to give advice, but my suggestion would be rather than focusing on price and trying to essentially guess where it's going to go. Because again, you've got carbonate price, you've got hydroxide price, you've got battery grade, non-battery grade. It's just too difficult to try and figure out where we're headed. Look instead at the lithium cost curve, okay? Because irrespective of whether or not lithium is at 20 or 15 or 12 or $6,000 a ton, if you are at that lower, let's say, decile or quartile of the cost curve, you're going to be fine no matter what. So it's really more, I tend to look at things more on the cost side, which really talks about the economics of given projects more than anything else.
All right. And another big topic this year has been changing technologies and what the future will look for battery chemistry. What is your take and how do you see it impacting the lithium market?
I think it's going to be a slow, gradual progression. The lithium-ion battery as we know it today has been, let's just say, commercialized or in existence for 30 years. So it's got this unique track record of safety and data surrounding how it's used. And so I just don't think that we'll be making the switch from, let's say, NMC 111 to NMC 811 that quickly. In fact, I think we could hopefully we'll be here in 2025 or 2026 having this conversation, and we'll still be debating or maybe arguing about how quickly or slowly this transition is going to take. I think it's going to be slower, but I don't think that bodes ill for lithium by any stretch of the imagination. It does call in demand for cobalt, demand for lithium, and some of the other metals, but I don't think it's a negative factor by any means with respect to lithium demand. With respect to lithium demand, if we really are going to shift towards solid state, and one of the takeaways from this conference, I would argue, is that shift might not happen as quickly as we think. But my point is that, if we do shift to solid state, that would argue or that would imply increased lithium demand as opposed to decreased, just based on the fact that you're using lithium metal in the anode, which is something we heard a lot about at the anodes conference. So I think the battery chemistry argument, if you want to call it that, is incredibly interesting. But it also does make analysis of this overall space really, really difficult.
My last question for you today, Chris. As the year is almost coming to an end, what do you expect for lithium in 2019? And maybe what would you say are some factors to watch?
Well, I think that, I know I said ignore price, but everyone's going to focus on it anyway. I think that the China price, as inconsequential as it is, has probably bottomed. And I think what that will do is probably bring some interest back into the space. We are already starting to see delays with respect to supply additions. Of course, SQM came out with some news last week, and Galaxy was, I guess, indicated some challenges in terms of their ramp as well. So, I think that's the way that the market sort of plays out throughout 2019. There's not going to be a moment where, it's like a lightning bolt or you snap your fingers and all of a sudden everything starts up again. I think you're going to have to see sustained demand, which we will, and you're also going to see a situation where there's kind of slow and intermittent supply delays. And that's just the way the market's going to unfold.
All right. Thank you so much for joining us again.
Thank you.